Hi, my name is Madhu Kanwar. I am a financial divorce specialist, and today I wanted to share with you some financial planning strategies that you could employ at the year of separation. So, one of the things I want to say is that separation is likely going to be one of the most challenging events in your life, and I would understand why financial planning isn't something that's at the top of your mind. But if you consider your separation and treat it like a business, since it does involve a fair amount, there is a lot of financial um, activity and division that's going to happen. So treat it like a business. Possibly, if you can work together, one last time, if you could educate yourself and use your resources appropriately, use them where they will provide you the most amount of benefit, then you could save thousands of dollars. So talking about the strategies at the year of separation, the first one is the childcare deduction. So if you have young children and they're going to, they have some sort of childcare arrangement, the rules of the CRA rules are that the lower income spouse is the only one who is able to claim the childcare deduction. However, in the year of separation, the higher income spouse may claim that tax deduction. So what that means for you, just as an example, if you have a couple, one earns 100,000 and the other earns 40,000, I'm just giving an example, and you have childcare deductions of $8,000 that you may claim. Under normal circumstances, the lower income spouse would claim that deduction on 8,000 deduction on an income of 40,000 would give you a tax refund of about $1,600. At the year of separation, the higher income spouse may claim that deduction, and on an income of 100,000, the tax refund would be about 2,700. So that's almost an $1,100 difference that is coming back to the family, and of course you can decide how you want to split that. The second strategy I want to speak about is the spousal RSPs. So spousal RSPs are RSPs that where the contributor is making a contribution on an account that is owned by their spouse. The contributor would get the tax benefit or the tax deduction, and after 3 years, if those funds are taken out, the owner of the account would then be taxed as taxed as income, which is called the attribution rule. The difference in the year of separation is that the attribution rule is waived, which means if the higher income spouse makes that contribution, the lower income spouse can actually take out that money the following year, and the tax would be attributed to that person. So where a strategy like this might work is, for example, if you have maybe a single earning income household, so where one person is the prime or the main source of income, and just for the example, let's assume that this person earns $150,000 and the other spouse may be not earning anything at the moment. If that spouse makes a contribution of say $20,000 towards a spousal RSP at the year of separation, of course there's some other rules that go with it, then that person would get a tax refund of approximately on 20,000, I'd say about close to 8,000, a little over $8,000. If the spouse receiving, who owns that account, the following year then chooses to take those funds out, the tax they would pay on that withdrawal would be about $1,000. So there's a huge financial planning, tax saving strategy that can be employed. It could be a part of your settlement, but it's worth considering. And the third thing, and finally, I want to talk about is the first-time homebuyers plan, which was where you could use up to $35,000 from your RSPs and borrow $35,000 from your RSPs to buy a first home. This first-time homebuyers plan, as of 2019, has now been extended to families going through a separation. So if you separate and you want to buy another home, you could use $35,000 from your RSPs. If you want to buy your partner out, you could use that money as well. So these are some strategies that are not commonly known. You do need some financial planning to get there, but like I said, your separation is your business, and make it work for you in the best way possible. So I want to end with, if you like this video, please leave a comment. If you would like to work with me, my website is elixirconsulting.ca, and you could schedule a free discovery call. And I also have a financial divorce toolkit, which is an online learning platform, which provides you the information, the financial information and strategies like this, which you might benefit from. Thank you.